Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Wednesday, the 21st of October. Starting off with Asiamet Resources, where it looks as though there's some progress here after the gap earlier in the month. Nice consolidation, basically with shares finding support at old resistance around 4 pence. Looks like we're in a rising trend channel from last month, and while we're above the 3.9 to 4 pence area, on an end-of-day close basis, we could hit the top of that September trend channel as high as 6.5 pence, hopefully as soon as the end of next month. Erris is a stock which I think I mentioned a couple of times in the recent past, but just as well, really, given the way that it's going at the moment. Great acceleration to the upside, breaking the initial target there around 13 pence. Current view with where we have an upgraded technical target above 13 pence up to 21 or even 22 pence, which is the top of a summer 2018 price channel that I've drawn. Time frame on that, hopefully as soon as the end of next month, and the way things are going, perhaps even the end of this month. On to a rather more rare situation, Europa Oil Gas with a tentative recovery here, gap through the 50-day moving average 1.1 pence, 1.11 pence, and looking for an end-of-day close through the 200-day line at 1.22. If we can get an end-of-day or end-of-week close above the 200-day line, we would then hopefully be searching for a target at the top of the rising trend channel from March as high as 2.3 pence. But that would obviously, or in this case, more likely be towards the end of next month as a target time frame, given that this is normally a relatively slow mover. Added impetus for the upside argument is provided by that brief bear trap below 0.9 pence, just to flush out weak hands in the stock, and we've seen that with quite a few oil and gas stocks. For October, a new near-term low, and then back up again quite sharply. Bit of chit-chat about the next stock, which is Eco Atlantic Oil and Gas. Here it still looks as though, even though we haven't actually made any progress over the last 3 months, which is rather irritating, 20 to 23p, 24p, the range. We keep bouncing off the 20 pence level. We had our little mini bear trap last month, and 20 pence support re-established. So the view is that hopefully quite soon, and this could be the final move, end of day close through 23 pence should finally open up the idea of a top of May triangle target as high as 36 or 37 pence by hopefully in the month or 6 weeks after the 23 pence break, but hopefully by the end of next month. On to Escape Hunt, which had a few people throwing stones at it earlier in the summer. Looks like it's done rather better than might have been expected. Nice move up today through the, we have the end of day close through the 200-day moving average 8.4 pence, and a nice move up today temporarily through 10 pence resistance. The view here is at least while we're above the 50-day moving average at 7.7 pence, the top of that broadening triangle from April at 13 pence could and should be on the cards. On to Inspirit, which has not been one of the greatest bull situations over recent years, but still worth following just in case. And the just in case currently provided by the way that I suppose since the middle of June we've seen support come in at or fractionally below the 200-day moving average at 0.004. We've nominally broken a line of resistance from August at 0.005 today and yesterday, and the longer we hold above the 200-day line, the greater the chance of a move to the top of the rising trend channel from the end of January up to 0.11. But obviously, as I said initially, Inspirit has not been a great bull situation. As it is quite a dull day, both in the weather and in terms of small cap activities. Here we've got Jangada Mines, where the sort of bigger picture trade here looks as though we bounced off both the 50-day and the floor of the October 2019 price channel at around 3 pence. While we hold above 3 pence, looking for recent 3.5 pence resistance to break and a move, hopefully by the end of the year, up to 6 pence, which is the top of the 1-year trend channel. If you're cautious on the shares, which some might be, a weekly close above 3.5 pence should be enough of a momentum signal to give Jangada a decent push. Speaking of decent pushes, there's a second gap to the upside here for PipeHawk. We had one last month, which was never filled, which is great, and another one today. And really, all we're looking for now, I suppose, is an end-of-day close through 7.5 pence, which is basically 2020 intraday resistance or closing resistance for the shares. If we can get that, then we're looking forward to a top of a 1-year trend channel target as high as 14 pence, hopefully by the end of next month. At this stage, only really back below 6 pence and the floor of last year's channel, really delaying the upside scenario. More popular situation is power metals. Here, when the stock comes through, Power Metal Resources. Here we had a previous target there around 2 pence, and we've just today come fractionally shy of the revised 2.5 pence target today, so 2.48 the peak so far. If you are a fan of the shares, which some may be, the next target up would probably be towards around the 3.5 pence level, if we can hold above 2 pence resistance, or 2 pence support rather, which is the intraday support of today. So above around 2 pence, or 1.95 maybe to be precise. Best case scenario target by the end of next month up to 3.5 pence, which I'm sure will delight fans of the shares. Another stock which has delighted its fans today is Thor Mining. Here we've once again hit that 1.2 pence area, which was the initial target for the stock when it was sort of below, I suppose, 0.5 breakout there that we had at the end of July. What we're looking for now really is an end of day close through 1.2 pence to give us the next target higher, which is up to 1.6 pence, and an August 2019 resistance line projection for that, that's up to 1.7. So above 1.2 up to 1.7, and only really back below a penny, delaying the upside scenario. That's currently the gap area for the shares today. As I said, it was and is a quiet day, so looking at stocks we don't normally look at. One is Tullow Oil, where just got the first signs of recovery here. We had the telltale minor bear trap for the shares below 15 pence at the beginning of the month, so that's a positive. If we can hold above that resistance line there from July, around what's that, 18 pence on an end of day close basis, then we could get a little run up for the stock up towards the 25 to 27 pence area, which was resistance on the way down, and obviously the 200-day moving average there at 27 pence. Stop loss obviously back just below the 15 pence if you can afford 15 pence level if you can afford that. On to Tiziana. We're in the run up to the demerger, I think in the next week, for shareholders who qualify if they're on the register. Here we've got a nice little consolidation here after the peak through 2 pounds rather. Nice little sort of bull flag consolidation. The longer we remain above the recent swing low at £1.60, the greater the chance of more full-blooded move towards retesting July resistance on that 300 pence level. But obviously, if you're cautious of the stock, you wait for an end-of-day close through 206 pence as a momentum buy signal before going long. But given the way that the shares have found new support at and around the old September peak, it does look as though the bulls are back in control at Tiziana. That's it from me today. More updates tomorrow.